Thanks for staying with us. Last 1 hour of trade on what has really been a truncated week, but it has also been an eventful week. It's been a truncated week simply because of that big midweek holiday, but it's been an exciting week because market have not only retraced much more than what we've lost last week. We pretty much are on course to close the week on a high note, 1.5% for the Sensex. That makes it 1100 points for the Nifty, and that in a sense is a clear example of how strong the global undercurrent is. So it's not local, it is very global, and I guess things in a sense right now are really chugging along very smartly.
Absolutely. If you look at the markets at the day's highest point, be it Nifty or the broader markets, in fact, Nifty has reclaimed that 24,500 mark as well on an intraday basis. Sensex has seen a recovery in excess of about 1,000 points from the day's low. Take a look at what the broader markets are doing. Like I mentioned, a good going coming in for the broader markets. They are outperforming the benchmark indices, seeing upward momentum of about 1.7%. That's the mid-cap index for you. You have small cap index holding on to good strength. And if you look at the Nifty picture at this point in time, there's only 3 stocks that's in the negative territory. Divi's Laboratories, that's the top loser, seeing declines of about 0.6%, followed by Dr. Reddy's and Sunpharma. They're about in the negative territory. While it's the IT sector, the IT counters that are holding on to very strong gains. So take a look at Wipro, top gainer on the Nifty. You have Tech Mahindra, Grasim, Shriram Finance, LTI Mindtree, all of them seeing good strength in trade today. And that's the picture that you're seeing in the sectoral indices front as well. All the sectors are in the green. So it looks like, Nikunj, we are actually ending the week on a very firm footing at least. And if you look at the way how the markets have also moved from the close of August 2nd, if you look at the global markets, they've actually managed to recover pretty well. You have Nifty that's still around those levels. 24,700 was the closing on August 2nd for the Nifty.
Yeah, so just think about where you were in terms of retracement, and global markets have also retraced quite a bit. So the story is not local, the story is global. The story last week was not local at all, it was very global. However, within that, you must say that India has recovered the least. Why? Because we fell the least. There are some changes which have clearly happened in terms of the pecking order, which is PSUs are taking a back seat, defensives and IT are making a comeback. But in terms of the real outperformance, I think the outperformance still lies with global tech, it still lies with NASDAQ, it still lies with Japanese Nikkei, and that's where I think the real churn is happening.
Yes, absolutely. That's where the churn is happening. But let's bring on board Naresh Mirani to exactly understand where is that churn happening right now when you talk about the markets, and which are the sectors that are looking pretty bright and somewhere that you can look to park in your monies. Naresh, good afternoon.
So in terms of the sectors, we are seeing clear leadership coming in a lot of large cap IT names. You are seeing a HCL Tech or a TCS trying to break recent swing lows, as well as the recovery is strong in the mid cap, small cap IT names as well. So that's a sector which is leading the move. As well as globally, we are seeing NASDAQ closer to all-time highs. And then when we look at the whole fall started from Nikkei, where it was at 38,000, went to 32,000. And now we are back to 38,000. So the whole recovery has been totally done globally. In that sense, we are still to catch up with where we were before this fall started. But given the fact we did not fall a lot when the global markets corrected, we are still okay. So overall, the view is we are seeing some change in terms of leadership. So you have IT, then there is a lot of AMC stocks as well as insurance, which have shown relative strength. And pharma continues to be an outperformer.
All right, so that's the way how the sectors are looking like. But we also have Amnish Agarwal joining us on the show. Good afternoon to you, Amnish. And let's try and dissect sector-wise what exactly is happening actually at this point in time. Today, you're seeing IT sector holding the fort pretty strong in trade. But do you think that the tide has turned for the IT sector? Can one at least say that? Or do you think this is just a short-term move? Fundamentally, things are not looking that bright as yet?
You see, this is in my view, the typical sectoral churning which is happening. Because if you look at, say, last 6 to 12 months, you can say whole host of sectors ranging from, say, your capital goods to, you can say, your hospitals, autos. So they have seen very sharp rallies, and you can say in certain cases there has been, you can say, the stock prices have increased in geometric progression. Now, the sectors which have not done well from the last 2 to 3 years, which includes consumer, which includes IT services, and some of the, you can say, the other names might be there. So these sectors are now getting into some sort of an act, and it is not essentially a reflection of what has happened on the fundamental side, because all these sectors, for example, you are talking about IT services, is showing some signs of a revival in coming quarters. But given the fact that the valuations are not at a very steep level like it is there in many of the other sectors, and the sector has been underperformer from the last couple of years, so there is some sort of a money flow which is happening into these sectors, including IT.
Money flow happening into the IT sector, but then what's your take coming in on the entire new age tech pack actually, Amnish? Because we've seen a very good momentum in all of these counters, and some of them have actually proved their worth. The fact that everyone was dismissing, or they were dismissing those companies like Zomato, the way how the stock has performed, the company has performed actually. The financials are also telling or talking sign for that recovery that the stock price has noticed. What's your take coming in this new age tech stocks? Barring Zomato, do you think anything else looks attractive right now?
You see, very difficult for me to pinpoint which is going to be, you can say, the next big play in case of your tech companies. But having said that, these tech companies have actually gone through a phase, because initially there was a lot of hype, then many of them went down. And I think many of them have already come up, you can say, led by Zomato. Even you can say Nika's numbers were better if you compare on a Y-to-Y basis. But having said that, I think many of them are funding their business models and financial parameters right. But are they cheap? The answer is no. But many of these models are futuristic, which today investors are ready to go by that narrative, and they are ready to take a bet on these stocks. So I think it will be purely on a case-to-case basis, but yes, there would be definitely a set of companies which are going to do well, and given the kind of growth rates which are expected from the new age companies, which would merit to be in the portfolio of investors.
Right, so that's all about the new age tech stocks, but let's actually take stock of how the flows have been actually in the FY25. We at ET now have collated some interesting data to get a comprehensive comparison between SIP and FII flows. Let me go across to my colleague Sharad Dubey, who's done all the number crunching here. Sharad, over to you.
Well, we have spoken about the SIP inflows. These are at record levels at 23,000 odd crore rupees. But there is also more details to this SIP numbers which we generally track. SIP inflows is just one part. There is also an outflow impact also, and then we come at something called as a net SIP flows. Interesting data coming in. Of course, for the month of June itself, it stood at more than 21,000 crore rupees, but there was an outflow as well. That was roughly 8,600 crore rupees, and then totally the net impact of the flows from SIP stood at roughly 12,681 crore rupees. Now, the main idea about this experiment is that the net SIP numbers is something which you can garner, and that still ranges to roughly 55 to 60% of the registered SIP inflows which are announced by AMFI. Also, interestingly, there is a second group of information which is more important, that is the SIP stoppage ratio. Now, the SIP stoppage ratio is an aggregate of SIPs which are discontinued or have completed their tenure, and that has been divided by the SIPs of new registered members. Now, interestingly, the higher the SIP stoppage ratio, that means larger number of SIPs have been discontinued. So, of course, we look at the numbers for the month of April, May, June, July, all of these numbers have been more than 50%, indicating that higher number of SIPs are being discontinued. Also, apart from these two data sets which I pointed out, let's look at how the movement has happened in the cash market for both FIs as well as DIs. And over here in FY25, we look at the first 4 months or so, heavily biased towards the negative cash outflow coming in the FIs. For the DIs itself, it has been on the positive side. But apart from this, also looking at the Nifty returns, that has been positive. June month gave almost 7% return, while the month of August is giving currently almost minus 2% return.
Thank you so much for that, actually, Sharad, for breaking down that data for us. And, Nikunj, when you look at the data, everyone's only looking usually at the SIP inflow number. But there is also an SIP outflow number. And when you look at the net number, it's somewhere around 11,000 to 12,000 crore rupees when you talk about the SIP numbers. If you look at how should one read into this data, actually?
See, one of the most psychological hurrah, or the psychological factor which is at play on the liquidity front is that every month we get 20,000 crores of net SIP flows. But that's the gross number, which is that what is the total which you're getting. But you have to subtract the net outflows also. And once you subtract the outflows and the SIP stoppage number, that number on a net basis is half of that. So suddenly for those who thought that, okay, 20,000 crore is something which is given and granted every month, that is not the story. The story is still very impressive, but the numbers are different, which is that instead of 20,000 crore, it actually is at 10,000 crores. That's little over $1 billion, or nearly 1.3, $1.4 billion, and certainly not $2.5 billion, which in a sense looks like this optical number. So while it's great to talk about Indian SIP investor, where the commitment levels are strong, the consistency has been strong, the event risk has not really mitigated the commitment towards the long-term wealth creation, but the net number I think is very different, and which in a sense could be a problem going forward if the FI intensity increases. Up until now, DIs are buying and FIs are selling, or FIs are selling, DIs are buying. That is getting counterbalanced. But somewhere, I guess the gap now really threatens to go higher, like we've seen in last couple of months, where FI selling is actually overpowering the SIP gross, not the net number, and which is what I think we need to bring out now.
All right, so the data point that one need to watch out very crucially actually when it comes to the SIP flows, and as well as what is happening when you talk about FI versus DII. But on that note, we slip into a break on this edition of Closing Trades. When we come back, we'll talk about markets and which is the direction that the market is headed from here on. Don't go anywhere.
All right, Amish Agrawal, Head of Research with Prabhudas Leeladhar, he's there. We're going to take the conversation ahead with him. Naresh, we've been talking technicals with him. Amish, what's your view on Ola? I mean, last week when it went public, it was a flat listing. The issue just scaled through. There was no large rush when it went public. But from 75, 76, what the issue price was, it is almost doubled in a week. What has changed in a week that for a stock which went public a week ago did not get great response, and now it's circuit up?
Nicholas, this is typically what has happened with many of these, you can say, new age companies, where the earnings are not visible as of now, but then there is a section of people who, you can say, take up leap of faith in the, you can say, the sales momentum and the fact that they will turn around in future. And secondly, I believe Ola was to, you can say, also unveil its foray into the bike segment. Although globally, your EV bikes, they have not been that successful. But I don't rule out that today's move might be, you can say, particularly due to the entry in the bike segment.
No, but my point is, has anything changed which is making markets so excited? The idea of moving towards battery manufacturing, it existed. The details were there in IPO prospectus. The fact that they would be launching a motorcycle on 14th of August, they had shared when they went public. So at 75, 76 rupees when it went public, the general view was it's a loss-making company and it's difficult to understand the future cash flow, so please avoid it. How come that narrative has changed? I mean, I understand that if an issue had great response and it finds a lot of buyers after it goes public, it's fine. Here's the issue which did not find any buyers, and now today everybody is rushing in.
Yeah, that is what I exactly said, that nothing practically has changed in the last 1 week, except that they have now actually launched the bike. Now, beyond that, is there likely to be any significant change in the, what you can say, the overall numbers, or are there any big, you can say, pickup in sales happening in the scooter segment than what it is known? I don't think anything much has changed. It is, you can say, as it happened with many of the other new age companies, so it is more to do with the confidence that the new age companies, or you can say the EV bikes, EV scooters, they are the future. And their market caps, people might think they are today lower, but in few years, these companies can be hugely, you can say, profit generating. So this is more like taking a leap of faith, and then you can say taking a call on what is in store maybe for the next few years. Otherwise, if you go by purely fundamentals, if you are particularly asking anything has changed, my clear answer is nothing has changed in the last 1 week for the stock to move so sharply.
All right, nothing's changed materially apart from the fact that Ola has gone ahead with the slew of new launches, also that e-motorbike launch. But what's your take, Naresh? Actually, let me stay with the two-wheeler space as is. What's your take coming in the two-wheeler space? With the entrant of Ola Electric, what are the charts indicating for at least TVS and Hero MotoCorp for the matter of fact?
So we've started seeing a pause in the whole auto pack. So Hero MotoCorp has corrected from 5,800, 5,900 to closer to 5,000 levels. And post the numbers also did not see a strong price action. But we are getting into a consolidation mode after a huge rally. So most of these names have done really well. So TVS Motors also is facing a lot of rejection at new all-time highs now. So the stock hit a new all-time high, but is not seeing a sharp move. But the trend is still up for TVS Motors, unlike for Hero MotoCorp, wherein the short-term trends have reversed. Same way, Bajaj Auto, if you look at it, the trends are still strong, but the consolidation is going on. So overall, longer-term trend, no major change in the auto pack, two-wheelers or four-wheelers. In the short term, we could be looking at a pause in these names.
Also have a lot of brokerages, a couple of brokerages actually that were pointing out that similar case coming in for Hero MotoCorp. At least Equirus is saying that the rural recovery should drive their volume growth, but the margin is at a 13-quarter high despite losses in e-wheelers. They are saying the e-two-wheeler market share, however, they are losing in that sort of a segment, and they're seeing a slow improvement coming in, but also you have CLSA, which is saying that the EV business is loss-making, though quantum is declining. That's the take coming in on Hero MotoCorp, whereas brokerage is actually giving out their views. But technically, looks like there is a pause in the up move coming in for Hero MotoCorp. But we also have Vishal Malkan joining us on the show right now. Vishal, good afternoon. Thank you for joining us on the show. And let's exactly find out what is happening when you talk about the likes of the telecom space. You have Vodafone Idea, you have Bharti Airtel, you saw some sort of a movement coming in MTN, and I don't even know if you would call that one in the telecom space. There's a lot of movement happening with the tie-up with BSNL. But what's your take coming in on telecom? How is this particular sector looking like it? You have Macquarie, which has a positive note coming in for the sector.
I think definitely there's a lot of momentum we have seen in the last few months in telecom sector, but I'll still go with the big boy, which is Bharti Airtel, which is performing steadily in the last few months, and I'll go with that only. I don't want to venture into Vodafone or MTN, and as of now till we see them on the monthly chart, so I'll stick to the Bharti Airtel.
The one which is doing cartwheels, I think, and I'm fixated with this one, pardon me, is Ola Electric. Value transaction, strong. Volume transaction, strong. The other one where value transaction and both volume transaction has been very strong, I think, is Suzlon. And Vishal, for a trader who has no view on fundamentals and debt, but only on momentum, where is Suzlon headed? Can it be 100 rupees before the year ends?
I think 80 to 100 is not a big jump, and it can definitely see that those levels in this year, maybe in the way it is performing on daily, weekly and monthly charts. And it's a clear, strong trend going on. So yeah, 100 looks more likely in this year.
Some interesting data, and there are three stocks which tend to really get a lot of attention from retail investors and traders, and I would say more traders here. And those three stocks are, one is definitely Vodafone Idea. Second, I would say to some extent is Yes Bank, and third is Suzlon Energy. Where is the retail and HNI holding in these three stocks? In Vodafone Idea, there has been a huge change in the retail and HNI ownership. It's gone up by nearly 100%. In case of Yes Bank, the number has changed by 43%. And in case of Suzlon, it's a change of about, 300%. So interestingly, the data seems to be indicating that with the exception of Vodafone Idea, in case of Yes Bank and Suzlon, the HNI and retail ownership has actually come down. And this actually is again a big data change versus what my opinion was till the time I did not look at the data, because my sense was that Suzlon, Vodafone Idea and Yes Bank have only seen uptick largely because of retail and HNI activity, not so much so from institutional activity. But in case of Yes Bank, especially after that capital infusion which has happened by PE investors, of course HNI, DI activity and HNI institutional stake has gone higher. Vodafone, the QIP sailed through and they were able to raise debt, and that's the time HNI and retail activity also increased. But in case of Yes Bank, I think for the first time we've seen a decline in retail and HNI activity, because this is one stock which in a sense is dominated by entire HNI and retail category.
Right. So that's the telling sign coming in for all of these counters, the way how actually the retail and HNI stake has been performing going ahead. But coming back to you, Avnish, what is your take on these counters? Have you looked at any of these counters, given the fact, the way how they've moved, the way how it's actually garnered a lot of investors? Most of them are also touting them to be turnaround candidates.
You see, all of these companies, as you rightly said, they are tipped to be the turnaround candidates. For example, you look at Yes Bank. I think if you compare from the last 2-3 years, the performance is better. And now there is a news that led by SBI, the people who had bailed out Yes Bank 4 years back, so now they are, you can say, looking at exiting, and some probably a foreign player will coming in with a, you can say, large stake. So obviously in such a scenario, I think there is likely to be more consolidation of holdings in Yes Bank as we go along. And usually if you get a strong, you can say, partner which can bring something on the table, then we see more increased investor interest coming in Yes Bank as we go along. So in the near term, you will not find the valuations attractive, but over the period of long term, I think this is got the distribution, we have got the technology. And once I think someone comes in with lot of commitment, lot of money, I think the things can improve. The only stumbling block as of now seems to be the issue of those tier 1 bonds, around I think 8,500 odd crore. What happens to that? Now regarding the other two, Vodafone, I think in the near term the worst might be over. The benefits of, you can say, increase in the tariffs that will flow through. They are also looking at rationalizing some of the postpaid plans, which will indirectly give them, you can say, increased throughput. So I would say from here on, much on the fundamental side as of now, but as we go along, I think the industry will, you can say, continue to improve from here. But definitely, I think I would be better off going with a leader, because you can say the Bharti is doing really well, and whatever happens, if there are more tariff increases, more rationalization in the industry, Bharti obviously will be the, you can say, the first one to benefit.
All right, then on that note, thank you so much, Avnish, for joining us on the show and giving us your view on the various sectors. And we'll slip into a break now on this edition of Closing Trades. When we come back, we will ask all of our guests their BTSD ideas, as well as which pockets of the markets are looking good. Welcome back. You're watching Closing Trades on ET Now, and markets are near those days' highest points, holding on to good strength. That is the Nifty for you, and also ditto coming in for the broader markets. But which are the stocks that are actually moving on good volumes today? You have Ansh who's here with all of that details. Ansh, over to you.
Right, so Birlasoft will be the first stock in focus, as the stock has given a good breakout from its 6-session consolidation pattern. Also on weekly time frame, we are seeing that the stock has formed a bullish engulfing candlestick pattern, which usually indicates a potential reversal in trend on upside. Also, we are seeing that the breakout has been backed by good volumes of around 2 times its average trading volume of last 20 sessions. Apart from this, MCX will be in focus. As you can see in the chart as well, the stock has given a good breakout from its upward sloping resistance trend line, along with good volume of almost 2 times its average trading volume of last 20 sessions. Persistent System will be another stock in focus, as the stock has given a breakout from its 6-session consolidation pattern, and it trades above key DML levels as well. Apart from this breakout stocks, there are high chances of Aditya Birla Capital and Birlasoft exiting the FNO ban list. So keep an eye on the stocks.
For that, Ansh. We also have now Sudeep Bandyopadhyay joining us on the show, Group Chairman at IndiTrade Capital. Good afternoon, Sudeep. Thank you so much for joining us on ET Now. And let's get your quick view coming in on the auto pack, entire auto pack, what exactly is happening. A slew of launches coming in, be it the four-wheeler players, be it the two-wheeler players. But what's even crucial is the fact that what is happening at the inventory level for most of these companies, given the fact that the inventory levels are pretty high. Also, the fact that they're giving a lot of discounts. Do you think the future is going to be brighter, or is just going to die down now for the auto sector?
Well, I will divide the entire auto sector into two segments probably. One is the passenger vehicles, and the other is the two-wheelers, four-wheelers and two-wheelers rather. As far as the two-wheelers are concerned, we are positive that I think, with good monsoon and rural consumption picking up through multiple measures taken by the government, and also, as I mentioned, the monsoon, the demand for two-wheeler will increase in the forthcoming festive season. So I'm positive on two-wheelers. We have seen what is the excitement is there around Ola Electric. Of course, that's got a different set of drivers and reasons. But beyond Ola Electric, I think overall two-wheelers, particularly Hero MotoCorp and also Bajaj, we are positive. As far as four-wheelers are concerned, we are also a bit cautious. And you're absolutely right. The inventory at the dealer level is high. And one has to see how this pans out. Of course, we are heading into a festive season and a lot of offtake is expected. But I'll be in a wait and watch mode, particularly because of the fact that the valuations are not cheap. At these kind of valuations, the margin of error is very limited.
What is your understanding of Ola Electric? 75 rupees when it went public, everyone said, ouch, loss-making company. Nothing has changed. But a week from now, the issue price has doubled. Now everyone is saying, ouch, we missed it. So ouch both the ways, right?
Well, Nikunj, I think the FOMO is a big factor in this. And I'm really reasonably confident that FOMO is to an extent driving. But having said that, I think the quarterly numbers which they came up with were a pleasant surprise, I would say. And as the management explained, that if you segregate into two portions the entire business.
So which part of the ouch are you on? The one who missed it, or the one who said, ouch, we should have bought it?
I'm on the other side. I should have got it.
And by the way, Nuresh has just come from surgery. So Nuresh, I hope the ouches which you had because of pain, that is also over, right?
Yeah, that's over at least.
Chalo, at least one person is happy. Nobody is complaining about that on a Friday evening. Vishal, are markets on course to make a new high? That is what it looks, looking at the market inertia and the market breadth.
A new high might be slightly away from where we think right now, because it's caught up in that range of 24 and 25. 25 being a big psychological number, and it's made a double top there. So it might remain buoyant like right now it is, but we should be more stock specific and sector specific rather than looking at Nifty making new high or not.
Right. Let's actually shift focus to what exactly is happening in the quick commerce space, because quick commerce war is all set to intensify, looks like it, with a brand new entrant on the spectrum. Flipkart is poised to dive into the quick commerce market with the launch of Flipkart Minutes. It's an interesting note coming in from Morgan Stanley, which paints a comparative picture of the charges, the investments, as well as target. Sharad, as always, is here, who's done all the number crunching. Sharad, over to you.
Well, yes, there seems a rising competition coming in the quick commerce space, and as per report by Morgan Stanley, there are certain news triggers which are very important to mark out. Firstly being Flipkart. They have announced Flipkart Minutes. It's a queue service basically, and they're trying it in Bangalore. Certain locations the launch has happened when it comes to Flipkart. Also recently, Zepto raised $340 million, valuing at roughly $5 billion. And over the last 2 months itself, they have raised almost $1 billion. Also, Ola Cabs, they are expected to start their own dark stores as well. And interestingly, Reliance Retail's Jio Mart, they are also expected to start dark stores. Also, the media reports suggest that Reliance Retail may infuse capital in Dunzo, which is a queue service player as well. Now, there is an expected impact for Zomato's Blinkit also. Two important points coming from the report. First is there is a market leadership and aggressive expansion is being rolled out, and the company targets 2,000 dark stores by calendar 2026 end. But now let's look at what the comparison says for the four large players. Where do they stand? The first parameter we have taken is the delivery charges. Over here, for Flipkart Minutes and Blinkit, it ranges between 30 rupees for orders below 99 and 16 rupees for orders between 99 to 209 when it comes to Blinkit. Now also the larger size orders, of course, you will see those orders will be coming in at 0 rupees. Also, let's look at the small cart fees, and whenever a quick service comes up with a small cart fees, it's generally for a smaller size orders, and that's why they charge fees to it. Flipkart Minutes, currently it's new, that's why they have given a nil, no small cart fees, while for Blinkit, Zepto and Swiggy Instamart, it ranges between 15 to 20 across various points. Also, there is a platform handling fees. That is also an important trigger, especially for stakeholders as well as for the users. And over here, Flipkart Minutes, it's on the lower side of 5 rupees. It ranges between Blinkit and Zepto, 4 to 10 rupees. And in the middle is Swiggy Instamart coming in at 7 rupees as a platform or a handling fees. Lastly, the important thing is time. That is what quick commerce is all about. And as per Morgan Stanley's report, Flipkart Minute, it roughly takes around 13 minutes. It's newly launched. Blinkit Zepto, it's even Stevens at 9 rupees, while on Swiggy Instamart, it's coming on the faster side of 5 minutes.
And let's look at that data. The platform fee, there are two things here. Number one, for Zomato, one is food delivery and second is the quick commerce business. The quick commerce business is now growing for Zomato and perhaps could be bigger than the food delivery business. That's what the management and that's what markets are betting on. However, unlike the food delivery business where there are only two players, Swiggy, Zomato, Zomato, Swiggy, Swiggy, Zomato, whichever way you want to cut it, there are only two players. Reliance has not got into it. Uber Eats has not really taken off. Food Panda, which was acquired by Ola, did not become big. But in the quick commerce business, there were two players. Suddenly there are four, and there are murmurs that Reliance may also get into it. And now let's look at the sequence. I mean, Flipkart, again, they have got capacity to burn because they're backed by Walmart. Zepto has raised capital, so they're cash rich. They can afford to burn capital. Third, I think is, let's look at that, assortment. Flip it around, some more names here. So there is Flipkart, there is Zomato, there is Swiggy, and then there is Blinkit. So instead of two players in the food delivery market, there are four players in the quick commerce market. And let's see which way the pie is going to move. But the clean run, what a Zomato and Swiggy have enjoyed in the food service business, that may not be the same kind of a landscape, at least in the entire quick commerce business. That's the point which I think this Morgan Stanley report is trying to bring out. Sudeep Bandyopadhyay, you want to comment on that?
Well, Nikunj, you're absolutely right. It is a very, very hotly contested space, and it's going to be more so. I'm reasonably confident Reliance will enter this as well by recapitalizing Dunzo. So I think it is going to be very, very competitive. Now the question is of the scope of this entire business. I think the scope is significantly higher than food delivery because it does encompass pretty much everything. Earlier they were only talking about groceries and small items, but now they're talking about consumer durables as well. And the dark stores, numbers of dark stores, the size of dark store, all this is continuously increasing. Now, where the economics works and how the economics works beyond a level, we'll have to all see, because all of these are loss-making. And at this stage, naturally, they're loss-making. But eventually, they have to start making money because that's where the businesses will be rewarded. And we'll have to see which one and how they start making money. Yes, some of them have a lot of money to burn for the time being. But that doesn't make a business. Only burning money doesn't make business. So we'll have to see how they develop the models and how the profitability comes, how the path to profitability also comes.
Right, so that's all about the quick commerce space. Definitely, most of us are the consumers for that particular domain, and we all have been enjoying the fact that we get everything very instantly, isn't it, Nikunj?
No, but that's the way how it is. You think about it, what was the proposition of the whole Amazon Prime? It was that it will give you a quick delivery.
Right.
That was the whole proposition. See, today with connectivity, with speed, with ease of doing business, you are able to get what really could be called as instant gratification. So human nature is all about getting instant gratification. It started with instant tea, instant noodle, and now instant delivery. So instant gratification is something which is now really what really could be called as a second basic human nature. Anybody who is able to give you that instant gratification, whether like I said, instant noodles, instant coffee, instant delivery, you in a sense are benefiting from that big change in terms of the human nature. And what is happening is that most of the companies now, and you look at numbers and maybe it's a good research thing to do, that most of the companies now getting 5 to 10% of their business from quick commerce. And because of quick commerce, these folks directly get in touch with the quick commerce network companies. Right. Let's say you're a Tata consumer, you'll directly get in touch with the quick commerce company. There is no distributor, there is no retailer. And you are going for smaller package. So it is not like a 5 kg atta ka package or a 5 kg oil ka package. It is a half a liter oil can. You may order it 3 times in a month. It could really be 1 kg of atta or 1 kg of rice rather than 5 kg of your monthly purchases. So monthly purchases have become weekly purchases. Right. That's how it is changing.
Right. Also, in case if you want to go ahead and pick up some ice also, that's also available actually in all of these quick commerce plays. But the fact that Nikun spoke about instant noodles, it definitely, the name that comes is Nestle, and also along with the Nestle, the entire FMCG pack actually. What exactly is happening in the FMCG space, Vishal, if I could ask you, because given the fact that, okay, we'll get back to Vishal. Let me take this question then to Naresh. Naresh, what's your take coming in on FMCG sector as a whole? Because come the month of June, you saw a massive rally at play in this entire space, that is the FMCG space. But now do you see that rally continuing, going ahead? You think that would be a sector one would want to bet on now?
So we saw that defensive move happen in June because a lot of these stocks were depressed and were sideways for a long time. But the problem is we are still not in a strong uptrend as such. So it is more like a stock where you want to buy on dips, a sector which you want to buy on dips. So if you look at the largest one, which is Hindustan Unilever, the stock had peaked out at 2600 in 2020, post the COVID bump up. And today also the stock is at 2700. So the stock has gone nowhere for the last 4 years. So consolidation has been very long. We've started seeing some names like a Dabur make the initial move. The stock went up from 500, 550 to 650 levels and has now started correcting. So the view is another 3-5% downtick in some of these names. You get a good entry point. But the expectation is not to make very large moves. It still remains a defensive play going forward as well.
Dabur 617. Sudeep, is there a reason to be optimistic about FMCG, consumer durables, everything which has got to do with rural India and monsoon in the second half of the trade? Because suddenly that part of the economy is showing signs of green shoots now.
Yeah, absolutely. In fact, if you look at the Q1 numbers, some of these companies, particularly I would say Dabur and all, I think the numbers were a pleasant surprise to the market. Even if you look at Colgate, which gets about 40% of its sales from rural India, the numbers were pretty good and better than expectations. So very clearly, there were some green shoots already visible in the first quarter. Of course, we are heading into a festive season, and the consumption naturally goes up. Also, monsoon has been good, and by and large, the distribution has been okay. We still need a little more, but by and large, it has been okay. So we are hoping for a rural and semi-urban demand recovery, definitely, and that will benefit some of these FMCG companies which have a significant portion of the sales coming from rural semi-urban India. And remember, FMCG as a pack was not really favored for quite some time. So, the valuation, while FMCG valuation is always rich, they haven't really moved up as much as some other sectors had moved up.
So that's the take coming in on those counters. But Naresh, let me come quickly to you and get your BTSD ideas for our viewers.
So first is a buy on HCL Tech. The stock has clearly shown leadership in terms of the recovery. Stop loss at 1650, target price of 1700. Second is a buy on HDFC AMC, which continues to hold closer to the 52-week highs on the verge of a breakout. Relative strength as well. Stop loss at 4200, target price of 4300.
That's HDFC AMC. Where is Birla AMC? In fact, Birla group of stocks have done rather well for themselves, whether it is Birla, Aditya Birla Finance or Aditya Birla AMC, or for that matter, Aditya Birla Retail, ABFRL. Let's look at all those three stocks. Sudeep, is there a trade in any of the Birla stocks and especially the finance funds? Because that's where I think Vishakha and her team are trying to really muscle things around.
I'll come to finance in a minute, Nikunj, but I believe ABFRL, there is a trade. I mean, this company had everything, and look at, if you compare it with Trent, and I think this has been talked about earlier by me also, where Trent has gone and how Trent has performed and what kind of valuation Trent is attracting. And ABFRL is nowhere close. But having said that, I think the opportunity is here and not probably in Trent. I'm not saying there's any problem with Trent. They're doing fantastic. Even the last quarter results were great. But the delta probably is in ABFRL, and a lot of activity is happening there. The group is really focused on extracting value from there. So ABFRL definitely needs to be looked at. As far as the financial part of the business is concerned, Aditya Birla Capital, I think, is a good buy, definitely. I'm not getting into the AMC and others. Capital, which has got pretty much presence of the entire financial services spectrum, and they are started doing well. A lot of things which were not going right have been tightened, and things are moving in the right direction for a change after a long time. So AB Capital definitely can be looked at from a long-term point of view.
All right, so that's the view coming in on the Birla group of counters. But let me come to you, Nuresh, and let me get your view coming in on these mining and mineral stocks or other metal stocks. They saw a sharp decline on Wednesday on back of a news flow. You saw the entire sector actually seeing a downtick of as much as 2% or so. No doubt they recovered towards the day's lowest point. But what's your take coming in on the metal space? And which part of the metal space are you bullish on, if you are, that is?
So there are two parts to it. One is what is happening domestically, which led to a correction. And secondly, if you look at global base metal prices, so we saw that huge run in copper when it went from $4 to $5, and we are back to $4. Same way, aluminium went up from 2,300 to 2,700. We are back to 2,300, 2,350. So that tells you the structure is still weak in terms of the base metal prices. They are back to the previous range. So in this case, the consolidation should continue. In terms of stocks, we would still look at a NMDC, which has corrected well from 280 levels to 220 to 200 levels. That would be a good price point to enter. Same way, Vedanta still looks interesting. So mining names are better than compared to the steel and aluminium names as of now. But for now, it has to be a slow and steady move from here on. We may consolidate a lot more than make such, say, high beta moves which used to happen in the sector before.
Right, but Sudeep, do you concur with what Nuresh's view is? He's preferring the mining side of the metal pack. Are you also of the view, given the fact that recently you have a negative news development in that particular sector, and the companies are still actually trying to analyze what sort of an impact it would have to their financials? But what's your take in the metal pack? Which side of the fence are you in?
Well, Nuresh has been looking at technicals. Fundamentally, I think I'm a little skeptical on the entire metal pack at this stage. The mining companies, because of what you just mentioned, I think there are a lot of gray areas still, and it will take some time before we can kind of identify the quantum of impact the companies will be getting hit with. As far as global scenario is concerned, while US interest rates are expected to come down, and that is positive for metals, the China slowdown and the challenges in China doesn't augur well for the overall metal sector. So I'm a bit cautious. If I have to pick one company in this space, I will go and pick up Vedanta because of the fact that I think it's a presence across spectrum of metals with leadership or near leadership position in multiple metals. Also, the demerger which is happening and is an advanced stage will definitely lead to value unlocking. So, and of course, on top of that, I think the OFS which they are doing will probably translate back into dividend for the shareholders. They need to do it for taking care of their holding company. So overall, I think it's in a good position and can be looked at from an investor's point of view.
Let's talk about what's exactly happening in the PSU PSU space, because the fact that we've had a lot of these counters see a sharp rally, then a correction, and now subdued moves coming in some of them. In fact, we spoke to Sameer Arora, who's the founder of Helios Capital. He believes that the PSUs as a theme is now over, but what are his views specifically on the railway stocks? Let's hear out.
PSU stocks at best will grow at 15-20%. I'm talking about earnings here, right? Because these are like single digit or early double digit margin businesses. If the economy is growing at 12-13% nominal GDP, then these businesses will grow at 15-18%.
True. So some of these things, we used to, for example, I've said in the past, I think from my budget day or whatever, that's like these railway stocks. Now these railway stocks, we were at that time, now we don't have, but we had this thing that, oh, Vande Bharat will come and these guys will sell food and the other guy will sell rakes. And then after a few days, you realize that now the Vande Bharat orders are being cancelled because the government has rightly, or at least based on feedback from this thing, thought that they should rather invest money on tracks and on security and on safety and maybe on non-air conditioned coaches and trains and things like that. So all the
All right, and moving on, in a bid to boost the economic prospects of Andhra Pradesh, the Chief Minister N. Chandrababu Naidu met with Tata Group Chairman, that's N. Chandrasekaran, in Amravati. After the meeting, Naidu took to the social media platform X to announce that the formation of the task force for the economic development of the Swarna Andhra Pradesh 2047, comprising intellectuals and industry leaders. The Chief Minister also revealed that Chandrasekaran has been appointed as the co-chair of the force. All right, and let's take a look at what the markets are doing. The fact that we are going to wind down for trade in the next 2 minutes. Firstly, let me thank Sudeep as well as Naresh for joining us on the show and sharing your views on various sectors, be it quick commerce or for the fact of the auto pack. As well as Naresh, thank you so much for sharing the technical details with us. But as we wind down for trade today, looks like we are going to end near the day's highest point. And as Snehi over here actually telling us exactly how the markets are going to end for the day. Snehi, over to you.
Well, absolutely, Cheryl. At the day's highest point is where we're shutting shop for the Nifty, and Nifty at 24,544, 1.5% recovery, a stellar 350-point recovery coming in from the day's lowest point. You also have Sensex 1.7% higher, Nifty Bank 1.6% higher, so looking good. This Friday has turned out to be good for the street as well. Let's take a look at what the broader markets are up to, because you also have some strength being seen on that front as well. Let's pull up Nifty mid cap and small cap. We'll have that on the screen as well. But in the meantime, let's talk about some big Nifty 50 gainers as well. Talk about Wipro, Tech Mahindra, because you had the IT pack that was up and away in today's trading session. M&M, Grasim, Tata Motors, Ultratech Cement, these are your top Nifty gainers. On the flip side, you only have two Nifty losers today. Divi's Labs and Dr. Reddy have ended the day in the green. Other than that, entirety of Nifty looking in the positive. Advance decline ratio also largely tilted towards the positive in the favor of the advances. Let's also take a look at some important stock buzzers in today's trading session. And on the winning side, you had CDSL that was up 9% today. Nippon India, PB Fintech, Zensar Tech, Welspun Corp, Piramal Enterprises. Remember, Piramal Enterprises was a big loser on Wednesday's trading session on the back of its weak earnings, but that stock is up 7% today. On the flip side, you also have Hindustan Zinc, one of the top losers today, almost 9% lower. Ratan India also 4.5% lower. Sham Metallics, Adani Energy, Usha Martin, all of these stocks on the flip side, however, are your top losers of the trading day. Sectorally, Nifty IT top performer today, almost 3% higher, followed by Nifty Realty, Media, Auto, Metal. All the sectors have closed the day in the green as well. Pharma, however, has closed with the least amount of gains, 0.5% higher for Pharma as well. But well, yes, Nifty IT is your clear outperformer today. But on that note, let's take a look at where Nifty has closed for the day. 24,540, comfortably above those 24,500 levels, and solid uptick coming in across the markets today. And that's how we end today's trading day.